Good morning. This is William McKissock with Schooley Mitchell, your expense reduction specialist. And this morning I have with me Adam Parks, the owner and president of Trinity Wealth Management, a financial advisory group. Adam, welcome to the show.
Thanks, William. Appreciate being here.
To get things rolling this morning, Adam, I want to learn a little bit more about you and how you get into the industry. So essentially, who is Adam Parks and how did you get into the financial industry?
That's a good question. I haven't really quite figured that out yet, but no, honestly, it was when I was a kid. I came from a middle class family. We didn't have a whole lot of money, and like a lot of people, looked around and saw a whole bunch of people that were successful and that had money, and I wanted to have those nice things, and I wanted to be able to one day provide for my family too. So I figured that I'm going to need to know about money. Kind of caught the bug early, and I've always been into it. It's kind of a math nerd. I hated math, believe it or not, but I loved money. So like 1 + 1, who knows what that is? But then all of a sudden you say, what's $1 + $1? And it's like, oh, okay, now I know how this works. So I always kind of found it interesting, both from a standpoint of how it worked, and also basically, I mean, you're gonna need money next to your family and your health. I mean, money is the most important thing that you're going to run into or need to know how to deal with. And they say that what algebra in school, right? So that's one thing that I always kind of got aggravated with is algebra. There's studies that say that only 5% of us use algebra in our adult life, but 100% of us use money. So I figured that I better know as much as I can about it, and hopefully that'll put me in the game a little bit.
I would personally argue you could take that 5% that use algebra and add it to the 100% that use money. Because I don't know anybody that uses algebra in a daily life.
Yeah, neither do I. But I know
everybody uses money, and these days we use plastic money, but it's still dollar signs, it's still money or whatever currency you're working in. So I want to ask you about when you're talking to clients, with all the craziness that's going on with COVID-19, and we're trying to imagine like you walking up to your clients, and your clients walking up to you and asking you questions about the financial industry, what's happening with the money and what's happening with yourself in relation to this, and obviously how that correlates with running your business. So how's all that affecting you and your clients?
Yeah, well, it came out of nowhere, right? We were actually at a conference when the bomb kind of went off, for lack of a better analogy. And COVID caught everybody by surprise, really. There's nothing that you could really prepare for. It wasn't anything that was businesses did or an industry did or anything. It was just something that came and hit everybody. And I think, a lot of people kind of remained calm. I think for the lack of action did a lot of people, did them some good, because really the number one thing in any kind of situation, I try to tell this to my daughters, and no matter what the circumstance is, number one rule is remain calm. I mean, you can't make a decision about anything if you're all worked up and have a bunch of anxiety. So if you can kind of come back to center, remain calm, and then make some decisions from there, you probably end up being better off in the long term. So that's kind of the advice that we gave to our clients, was first remain calm, and then from there figure out where to go. But most of our clients were already allocated where they needed to be. So if you were my age, 40 something, and I have plenty of years ahead of me before I need to retire, that's one thing. I can kind of weather the storm. Several more of these types of incidents will probably happen before I end up retiring. So I can be a little bit more on the aggressive side, and I can take some of that. Well, some of the clients that are older and maybe already retired or going to retire, we've already had them in more of a defensive position anyway. So they didn't really feel the pinch that a lot of other Americans felt in their retirement accounts.
Oh, good. So, I mean, obviously, caught us all on the hop. Now we have a presidential election. We've got a pandemic. We've got hurricanes. We've got wildfires. And obviously, you work with people all over the country. Tell me a little bit about that in relation to financial advice. What's going on right now, especially with the presidential elections? Obviously, it's almost like a layer on top of everything else. How's it affecting you and your advice?
Yeah, it's great question. It's no shortage of a challenge right now, that's for sure. With, like you said, the hurricanes, wildfires, mudslides, pandemics, civil unrest, presidential election. Really, how are you supposed to position yourself as an investor moving forward? we really look at the math, and we kind of don't listen to the noise in the media. We don't really buy into that, and like unfortunately, a lot of people do. They watch CNBC and they think that that's pretty much where all the news is supposed to come from in relation to the markets. Well, there's a lot of underlying data that we look at that isn't put on TV. Things like the fact that there's $4.5 trillion worth of money in money market accounts right now. So that's what we consider dry powder. That's money that used to be invested that no longer is, and it's just sitting on the sidelines. Well, once we get kind of more comfortable with the new normal, we're thinking that a lot of that money is going to come back into play, and rising tides raises all boats. So we're looking at that as a good sign. COVID is now, yesterday I believe is 2,300. So in Florida. So COVID's somewhat getting a little bit better. We're getting closer and closer to a vaccine. So that's pretty positive. But sentiment by business owners is actually really, really high, and they're anticipating 2020 and 2021 to be positive. I mean, if you were going to ask me in, say, April 1st, right, or even mid-March, hey, Adam, what's the end of the year going to look like? And I was to tell you that we're going to be up 6% by August, you would have thought, I should probably be in a rubber room and in a jacket. But that's the fact. I mean, we've had this recovery quickly. Now, the economy and the stock market are not necessarily correlated directly. So the stock market is a leading indicator. So what's going to happen down the road, and the economy is kind of a laggard. So yes, the economy is suffering. Yes, there is unemployment out there right now, but there's positive signs for beyond this election and beyond the end of the year. As far as the election goes, there's actually a lot of positive data for periods of time after elections. So when Republicans win the office, so if say the Republicans were to win this particular election, on the average, there's a 15% return that year in the stock market if a Republican wins, and there's a 7.6% positive return if a Democrat wins. And on average, it's 7.2 or 11.2, 11.28, whatever it is, on average. So it's not necessarily a bad thing. Yes, there will be volatility. The ups and downs like this may happen on the way leading up to the election, but a lot of signs are pointing to a positive outcome regardless of who wins. So those that are like, oh my God, things are going to, the sky is going to fall after the election or leading up to the election, remain calm, right? That going back to that first piece of advice, you got to remain calm, because if you're going to make a knee-jerk reaction and move all your money to cash, you might miss a lot of the uptick. And that if it continues to go that way, I mean, timing the market is something that nobody's really ever been able to figure out. So we don't necessarily recommend it. I mean, the best thing you can do going into this, remain properly allocated, make sure that your risk tolerance is in line with what your portfolio is set up like, and pay attention to it. Talk to your advisor, ask the question, what are we looking for here in the next few months? How am I positioned for the next 70 days or the next 3 months till the end of the year?
Cool. You kind of answered a lot of my next question, because my next question was just for the layperson. What does a financial advisor do? I mean, you touched on things about advising you to remain calm, what levels of risk with your portfolios. Can you elaborate just a little bit for the layperson who really still doesn't understand, what does Adam Parks as an investor do?
Yeah, it's funny that a lot of people do get confused and not really know what a financial advisor does. And I like to say that sometimes it's more of protecting the client from themselves. I mean, what we do is we take what is unknown. Again, 5% of the people use algebra, 100% of the people use money. But how often are we taught this in school, right? You're not taught this in elementary school. Most aren't taught this in high school, and few are taught this in college. So a lot of people are confused. They don't have this data. They don't have the information. And it's not that they're ignorant or whatever. It's just that they were never taught this stuff. So I'm a really bad guitar player. We're talking about you and the guitar. Why am I a terrible guitar player or ukulele? Because I don't know. I've never been taught, right? Same thing with the investment management and people's retirement and dealing with money. if you're not taught something, you might not be that good at it. So how do you get good at it? You talk to somebody that does this for a living and, like me, a little nerdy about the math and stuff, and gets excited about it. So typically what we'll do is we'll take people's, I call it a box of mess, right? Like a shoebox full of statements, and they go, here's what I own, and I don't know what any of it is. And that's not uncommon. And we kind of sift through it, and we figure out how it's classified from a tax standpoint, where it's positioned from a risk standpoint, and we kind of put it all together so they know what they own, they know why they own it, and they know how that fits in with their portfolio and then their long-term goals. And in this case, with COVID, a lot of what we were doing was protecting people from themselves by having them stay invested in the market, not do a knee-jerk reaction and pull out and go to cash. So a lot of people think about it this way. If you have 1,000 shares of whatever company and the market drops, say 50%, okay, well, now your value goes down 50%, but you still have the same amount of shares. So they're just worth less temporarily. So sometimes, if you get down 50%, and that's an extreme, obviously, and then sell, well, you've locked in those losses. And now the market could recover, and you're trying to chase all the way back up.
Yeah.
And if you have $100,000 and it drops down to 50, you lost 50%. But if you want to get back up to that 100%, you have to earn 100% return, because a 50% return on 50,000 only gets you to 75, right? So you have to have 100% return. So it's a lot harder climb on the uptick than it is, on the down. So we try to position people and remind them why they're invested, what their goals are, and things like that, and then keep them where they are. And those that listen to that advice usually do pretty well. And in this particular circumstances, it worked. We've had this V-shaped recovery, which everyone talks about. So the market dropped and then came back up. And we are at levels right now, we're at an all-time high again at the S&P. I mean, you would have literally locked me up if I would have told you this is where we would be April 1st. It's crazy.
Yeah, but obviously that's great advice, and it helps the layperson like me understand what you do. I've heard the term fiduciary in relation to financial advisors, and I know that you pride yourself in being a fiduciary financial advisor. Can you explain what fiduciary is?
Yeah, the fiduciary standard.
Fiduciary, sorry.
It's okay. The fiduciary standard really came about, well, it's always kind of been around, but not a lot of people really embraced it until Department of Labor came out a few years ago and wanted to make sure that every financial advisor, any financial representative, whatever, that was giving people advice had to abide by the fiduciary standard. And what that standard is you're looking out for the client and you're not looking out for yourself. So if I have 2 stocks or 2 mutual funds or 2 whatever, and I'm paid $100 on this one and $75 on this one, well, is there more of an incentive to offer this one because the advisor's paid more on it? Well, how do you know? Well, a fiduciary goes by what's best for the client, not what's best for the advisor. So there's a couple of different layers of that as well. So an investment advisor representative, somebody that has that designation, or like my designation is accredited investment fiduciary. That means that basically by license and by law, we have to do what's right for the client and not what's right for us. And I really do like that methodology. Like, we don't charge commissions. Everything we do is flat fee, and that way there is no incentive. There is no conflict of interest at all. Yeah. I mean, I want to make sure that my clients' investments grow. That's because we get paid the more that they make, the more that we make. So we're always on the same side of the table with them. Well, if you're not a fiduciary, then who's to say what kind of advice you're getting? Are you getting that advice because it's something that the advisor wants to generate a commission on, or are you getting that advice because it's truly in your best interest? So every advisor that we have in our firm is a fiduciary, and we really do abide by that. I mean, from the very beginning of the founding of this firm, that's one of the things that we really put out there. We wanted to kind of put the client at ease. Mm-hmm. Be a fiduciary. That way they know they're getting the proper advice without regards to commission, technology, transparency, and all that kind of stuff. So, yeah, that's pretty much what it is. And people really need to ask that question. You wouldn't let a doctor operate on you if they weren't looking out for your best interest. So don't let anybody operate on your portfolio if they're not looking out for your best interest. And how do you know? You ask them. Prove to me that you're a fiduciary. Show me. because they have to have a document called an ADV, and that form ADV will basically outline what they are. Don't let them give you their company's ADV. Nice try. We've seen people try to do that before, but no, actually their ADV, their proof that they're a fiduciary.
Okay. Yeah, I mean, I fully understand the fiduciary aspect, because at Schooley Mitchell, we're kind of operating along the same kind of guidelines, although we don't have the kind of law in place that you do, that we advise clients completely independently and only in their best interest, because their best interest is our best interest. The more we save clients, the more we make money. So I absolutely get the whole chain of that, is that it's best to work for the client, and everything else is up front and on board, and the client.
Yeah, it's kind of nice when that. Yeah, it's nice when that. I think your internet might have skipped there, but it's nice to know when you're sitting across the table from somebody that they can relax a little bit more. You know, there's not that adversarial relationship, and they're sitting down and they're like that. It's like, no, you're good, no problem. We're just going to talk and give you advice. And that's kind of what we try to do is base everything off of education. Yeah. We want to educate the client. We want to teach them what they need to know. Be there in normal terms too. My wife always says, talk in Gina terms, like normal people talk. With the jargon in this industry can get kind of confusing. I think some advisors kind of spit out a whole bunch of analogies and jargon to kind of make themselves look smarter. And it actually just makes the relationship more detrimental, in my opinion, because you got to talk to people like they're normal people.
Yeah, it's hard for people to understand if you're talking in language that you know, but the client doesn't know. The whole point you're there is because you know the language, you know the financial industry, so you don't want to hit them with jargon that they still don't understand.
Yeah, we could be translators.
Translator. Yeah. A final thought I have, Adam, is kind of any tips that you have for anybody that's watching this. And obviously you've talked about remaining calm, you've talked about the markets, you've talked about don't panic if your portfolio goes down, because you still have the same amount in your portfolio. You just need to kind of wait it out, as it were. So some of those tips, is there anything else that you have that somebody watching this might like to hear?
Yeah, I mean, I would definitely think that, and this is not, of course, it sounds self-serving, but I mean, I really do believe that people need to work with an advisor. I mean, you're not taught this stuff in school. If you don't have the time to manage it yourself, go speak to an advisor. Most of us will sit down with people for free. I mean, I sit down with people constantly, and it's kind of like doing it anyway, kind of put the pieces of a puzzle together when they give you that shoebox of stuff, figuring it out and then handing it back to them, saying, here's your path, here's where you're going, here's where you are, and here's where you're going. But I would tell people that you really do need to talk to an advisor, interview them, make sure that they are a fiduciary for sure. Make sure that they're fee-based, so you're not going to get hammered with unnecessary commissions and things like that. And more importantly too, when you're working with an advisor, make sure that you like them. I mean, because you're going to be working with them for many years, so you might as well like them. Yeah. And get along with them and know that they have the same values as you do.
Yeah, cool. Well, thank you, Adam, for coming on the show. I mean, this is a great insight for people who don't know the financial industry and obviously don't know you. And I can personally highly recommend you, because you are my financial advisor, as well as being a client with Schooley Mitchell. So anybody watching this show, you'll see Adam's details underneath his portion of the video. So please reach out if you want some honest fiduciary advice. And with that, Adam, I thank you for coming on my little show.
This has been fun, Billy. Thank you for having me on the show.
Thank you. And I'll now hand it over to Dave for the weather.